New day, new dawn.
I ain't seen Shorty in a minute. She asked how I am, I said calm.
What's going on, y'all? So boy, if you're happy, Craig, and I'm back with another video. As you see by the title of the video, today we're going to be talking about why I only use one time frame for my analysis, my entries, and my backtesting sessions. So if you're new to the channel, be sure to leave a like, comment, share, subscribe, and turn on the post notification bell so that you're notified the next time I drop. So without further ado, let's just get into the talk of today, and at the end of the video I'm going to analyze what I'm looking at today and what I might be looking at for the week. But I don't need to even look at what I might be looking at for the week because I don't look at the higher time frames, which is why we are making this video today. So let's just get into this, and don't forget to like this video. Yeah, okay, so I hope you already clicked the subscribe button or the like button, because this is going to be a good video for someone who's struggling with top-down analysis or just daily bias at all or in basic. So the 15-minute time frame is the only time frame that I look at. It's the only time frame that I analyze. It's the only time frame that I backtest, and it's the only time frame that I take my entries in. So how I came about going to the 15-minute time frame only is when I was backtesting. Every time I have a backtesting session, I would just go on the entry time frame that I use for my entries and backtest that time frame only. Then I realized that I didn't even need to go to the higher time frames or lower time frames for extra confirmation or for extra daily bias confirmation. So the 15-minute time frame is the only time frame that I use, and it's the only time frame that I'm going to use until I find another strategy, which I'm not going to do, because I only trade one pair, one strategy, and one time frame, and I only find my entries in one session, which is something that I'm also going to talk about probably in my next video or in my next coming 2 or 3 videos. So the exact reason why I do this is just for simplicity, man. In the markets, you need to have a strategy that is as simple as just waking up, turning on your screen, turning on your computer, turning on your PC, looking at your charts, and just saying that today I might have a trade, today I might not have a trade, which means you need to come at a certain time at the markets and exit at a certain time in the markets. So for me, I only take my entries between 9 a.m. and 12 a.m., which is 12 noon my African time, so UCT +2, because I stay in Zimbabwe. So that's how simple I want it to be for me when I'm trading. I don't need to stress about going to the 4 hour, finding the bias of the 4 hour, going to the 1 hour, having another confirmation that you are now selling, then going to the 15-minute. Once I go into my trading view, I look at the charts, I just go into the 15-minute time frame. Simple as that. I see that the market is either trending downwards or trending upwards. The market is respecting my moving averages, then I'm okay with that. Then I see for this day, maybe today we are having a reversal day, or today we're having a continuation day, which is what I prefer mostly for my trades, continuation days. So if we're having a reversal day, I'm just looking for short trades, 1:2, 1:1.5, then I'm done for that day, and I'll reduce my risk also, which is something you have to also consider when you're trading, that when you're taking B setups, reduce your risk, and when you're taking your A setups, use the normal risk or increase your risk if you are in profit. But if you're in drawdown, don't even think about increasing your risk to come out of drawdown, because it will kill you more, it will ruin your account even more. So the 15-minute time frame is the only time frame that I use, and in today's video you're going to see, at the end of this video, you're going to see me analyze on the 15-minute time frame, or even if you go back to the last 2 videos that I posted, I was using the 15-minute only, and I was trading on Euro USD only, which is also something I'm going to talk about in the coming videos. So if you managed to reach this part of the video, be sure to leave a like, comment, share, subscribe, and turn on the post notification bell so that you're notified the next time I drop. So another thing I want to talk about is I don't struggle with any daily bias when I'm doing this, because someone may think that if I only start using the 30-minute time frame for my entries, then I wouldn't have the higher time frame bias. I wouldn't have the daily bias or weekly bias. I wouldn't be trading according to the higher time frame bias, which is different for someone who is a day trader, because my trades only last for a day. If they happen to go into the next day, then I might have closed my trades earlier, or I might just be in profit that I don't even care if I get some swap on my account or if I get more commission on my account, which is what swap means. So I don't worry about, I don't struggle with daily bias. I don't think twice about which direction I'm going to use today, which direction I'm going to trade today, because with my strategy is as simple as seeing that my EMAs, I am below my EMAs, or I am in between my EMAs, and with my entry confirmations, my entry criteria, I find my entries in the direction that I am seeing on that day. I don't need to think twice that the market might sell today, the market might buy today, or the market, I don't even need to think twice about that. I just need to come into the market, say that okay, we had a massive push to the downside. Let's say in a bearish scenario, we had a massive push to the downside during pre-Asian session and during Asian session. So I might need us to retrace a little bit back towards our 500 EMA. Then that's what I'm looking at for that day. If I don't see that, it's okay, we'll trade again another day. And for you to use one time frame, you need to backtest it. You need to go into your backtest websites like FX Replay, or just backtest on your TradingView. Pay for TradingView Essential, pay for TradingView Premium, then just go back, then backtest that one time frame. If you find that maybe you backtest the 1 hour time frame, you backtest the 4 hour time frame. For swing traders, 1 hour time frame and 4 hour time frame. Then for day traders, maybe 30-minute time frame, 15-minute time frame, or the 5-minute time frame. Then for scalpers, 1 minute time frame. For the scalpers, it might be different. I'm not a scalper, so I might not know exactly what scalpers would have to do, but for scalpers, maybe you should just come from the 15-minute time frame, go down to the 5-minute, or then go to the 1 minute, or just 5-minute, 1 minute. But I don't want to talk a lot about that because I am not a scalper, I'm a day trader. So with that being said, I only take my trades, as I said, around 9 a.m. and 12 noon. So if I don't find an entry within that time space or time range, I am not taking any trades for that day. I am done for that day. Then I'm waiting for another day. And this is something that I have back tested and forward tested. That's why I am confident about saying that I only look for my entries at that time and in that session only, which is London session. Then my trades might run into New York session, I don't mind. But if we reach New York session and we still haven't hit my TP or still haven't hit the stop loss, that's when I'll move my stop loss to break even once we are in New York session. That's how my strategy works. That's how I back tested it, and that's how I found out it is profitable for me. So with that, I only come into the charts during London session for my entries, the New York session to set my break even, and my stop loss and take profit would already been set before I even take the trade, because my entries are buy or sell limits. So which means I put my entries at a certain fair value gap, at a certain level in the market. Then I just wait for, then I put my stop loss, then I put my take profit, then I just wait for the market to come back and tap me in. Then I am not touching the markets until we are in New York session. Then I move my stops to break even, then I just let it run to my TP. then I might maybe come back around 6 p.m 7 p.m to see if we still have some volume. If we are losing volume and the market is starting to curve backwards, or the market is starting to retrace, then I might close that trade for a one. Let's say my target was a 1:4, then I might close that trade for a 1:3, which is okay. Or if my target was a 1:3, then I might close that trade for a 1:2.5. And another thing is, don't be so stuck up on hitting your TP. If your target is 1:4, if you reach 1:3.8 and you see that you're losing volume and you can't handle the market retracing back to then come and hit your TP, close, my guy. That 0.2 won't mean anything. That's 0.1 that you want to have hit your TP. That satisfaction that you need in the market, that it hit your TP, that need for you to be always right, that need to be always perfect, doesn't help you in the long run in the markets. But for sure, you should let your trades run, let your trades hit your TP, set and forget if you think that the market still has volume. So for me, is once we are maybe around 8 p.m 7 p.m 6 p.m and we have lost volume and I'm satisfied that my trade is now at 1:3.8 1:3.9 and is retracing a little bit, I can close the trade, and that 0.2 won't mean anything. So man, that's how I trade. That's why I only use my 15-minute time frame for my analysis backtesting session. For simplicity, your trading should be as simple as ABC. A, which is looking at the chart, seeing your buyers. B, finding your entry criteria. C, taking your entries and setting your stop loss and your take profit limits. Then you are done for the day. So let's just get into the charts. Let's just analyze for today's markets, because today looking for buys on Euro USD, because last week NFP had a huge sell and we sold off, and I was actually in a sell on my competition account. So I don't trade news events like on my proper accounts, on my funded account or on my live account. So I was actually in a sell on Euro USD since I trade Euro USD, and I just placed some sells on gold and buys on JPY USD, not GBP USD, JPY USD, and it worked out well. But it was just for a competition accounts, which are hosted by every prop firm, I think, every month, where you like compete with other traders to see who's going to have the highest profit at the end of the month. Then you get cash prices for number 1, 2, and 3. Then prop firm accounts for numbers 1, 2, 20. So let's just look at the charts today and let's see if we're going to get any trade, which I highly doubt, because I saw the market was kind of consolidating or selling off a bit. Let me just see. Okay, so if you reached this part of the video, welcome, man. Thank you for tuning in again. So here you can see this is Euro USD, the only pair that I trade, and the 15-minute time frame. So what I'm seeing here is we had quite some consolidation for a while since May, coming into the beginning of this month, which is June. So this is the consolidation that we had, which we just broke last week on Friday during NFP. For those that don't know, NFP is a non-farm payroll news, like high impact news that actually push the market with high volume, and I don't trade such news. So right here, what I was expecting for today, just a retracement back towards the 500 EMA, then to continue the trend down. So it's what I'll be looking at these coming few days, since we have those favorable gaps. As you can see, we have so many favorable gaps that were left during that NFP day. So we might retrace back to the 500 EMA, then start to curve back down, then take our entries from there. If we don't eventually have a change in character or change in state of delivery, if we don't start an uptrend basically. So right here, today when my session came, which is London session, I start trading pre-London, which is 9 a.m. where those two favorable gaps right there that I could have used for my entries. And right here I would have used this lower one, just using the closest one to my 50 SMA, then with a stop of maybe 15-16 pips or ticks, targeting a 1:3. This would have been the trade for today, but I was expecting buys, so I didn't see any buys, so I didn't take any trade. That's why I had to make this video for y'all. So when I'm analyzing, this is what I just look at. I expect the market to trend down. It's kind of curving back up, so that's why I was expecting to maybe get a reversal entry for 1:1.5, 1:2. Then on the next coming days we continue down. So yeah, man, this is what I'm looking at. And I also look at DXY, not for entries but just for correlation. So DXY is inversely correlated to Euro USD, GBP USD, and NZD USD. So as you can see, we also had a consolidation within those same days. Then we broke above. Then now we're retracing, and we had those two favorable gaps, of which we respected the lower one. So as you can see right here, DXY reached the lower favorable gap, and Euro USD did not reach the lower favorable gap, which means that if I was to take a sell trade on Euro USD, I would see that DXY has already reached this lower favorable gap and Euro USD hasn't. Then I'm convinced that we might use the lower favorable gap on Euro USD, which is this one right here. What is it doing? Okay, which is this one right here. So it's simple as that. I don't need to go on the 1 hour, go on the 4 hour or anything. I just need to go on my 15-minute time frame, understand that the market is bearish right now, see what I'm expecting for the day, what I want to see for the day, then just look for that. Because there's two options. There's actually three things that didn't happen, but basically there's two things that didn't happen. It's either we buy for the day or we sell. As simple as that. So right here, this is what we had, and on DXY, this is what we had today. So I could have taken an entry for a sell on Euro USD or not traded at all, which is I chose the second one, to not trade at all. So this is how I simply analyze. So if you managed to read this part of the video, be sure to leave a like, comment, share, subscribe, and turn on the post notification bell so that you're notified the next time I drop.
Okay, bye.